Now we move on to the next panel discussion. So in this session, we will explore how robust and secure digital identity solutions are reshaping consumer experiences, reducing fraud, and expanding financial inclusion. In this session, we will discuss the latest innovations and regulatory frameworks that support the widespread adoption of digital identification technology. Our next session will be a big discussion on the topic, ladies and gentlemen, which is digital identification to facilitate remote onboarding and authentication. Wow. So let's welcome our moderator for this session, Ms. Meghna Bal, Head of Research and Fellow Esya Center. Can we please put our hands together for Ms. Meghna Bal, everybody? Now I would like to invite our prominent speakers for this session, starting from Mr. Debajyoti Chaudhuri, MD and CEO, NESL. Can we please have you up on stage, sir? Mr. Inderjit Camotra, MD and CEO, Unity Small Finance Bank. Ms. Subbalakshmi M. Shirali, MD and CEO, TJSB. Mr. Anuj Kumar, CEO, CAMS. Now, I would request the moderator, Ms. Meghna Bal, to take it over from here.
Yeah, thank you so much. Hello? Yeah. Thank you so much, and welcome and thank you to all our speakers. So I'll jump right into it because I don't want to take a lot of time. The experts are here, and they should do most of the talking. So broadly, we have two sides to digital identity, right? One is the windfall of reducing the friction of onboarding of consumers, particularly important consideration given that there are about 14.74 banks per 100,000 people in urban areas, and that number reduces to less than half in rural areas. At the same time, we have the downside or the pitfalls of digital interventions, right? And this is across digital, not only digital identification. They can be exclusionary, there can be inherent limitations, as we are seeing with biometrics. And there's the advent of emerging tech, like artificial intelligence, as the previous panel was discussing, that can create problems in terms of fraud. So with those dimensions in mind, Inderjit, starting with you, given the context that Unity is a digital-first bank, how has the advent of digital identification impacted your business?
Thanks, Meghna. Hi, good afternoon. It's a difficult shift after lunch, but we'll try and keep you awake. Meghna's introduced Unity as a digital-first bank. And you know, that actually is something which we are very fortunate to get. We have leapfrogged into becoming a bank very recently, just 18 months ago, thereby not having much legacy to go by and setting our own rules. Now, what does digital bank, what does digital identity, what does digitized onboarding mean to us? Actually, everything. Right from the day we hire our people, we onboard them with digital identities. All our staff. We start with something called Sybil. We go into Aadhaar authentication. We go to PAN, Perfios, Hunter. So digitally, we know the people who are joining us have an identity. But since Meghna called me on first, what is digital identity? It's very similar to our physical identities, a passport, a social security number in the year, to now having an identity by which, first, you can be identified. Second, you have given consent to be identified. Third, your identity can be kept secure. And fourth, regulatory verifiers can verify your identity and confirm it is as required by that law of the land. That is a digital identity. It can be for a human being, it can be for a firm, it can be for a device, a computer device. So digital identities pretty much define our space. So I said for Unity and for many of us, we start with onboarding, but then the main business is actually customers and business. So we digitally onboard with identities, which can be got again through good efforts in the past of Aadhaar and PAN in India. Other countries have their own country security numbers, and ours are getting very close to that. The third set of people we onboard are our vendors, our suppliers, who are also digitally onboarded. That way we know that the person is of good repute, organization is of good standing. They are not defaulting in the banking system. They can be fully identified by the GST, TIN, PAN, and everything else. Why do we do all this? We do it for very simple things. We do it for ease of business, and then we do it to reduce cost of acquisition. But I will not go into that at present. Let me hand back to Meghna for the next speaker.
Thank you. Anuj, over to you. You know, CAMS is a key part of the information infrastructure in the country, and digital identification forms a large part of that, and particularly an integral part of that. So how has the emergence of digital ID capabilities or the advancement in digital ID capabilities and infrastructure impacted capital markets?
Thanks, Meghna. Good afternoon, everyone. So very interesting question, and I'll probably tell you the story of how this all got built in the country in maybe around the last 13, 14 years. And especially in the capital markets, because it's a very robust, ironclad model. And now we see that perhaps all the onboarding, 80, 90% of it, is happening digitally. But first, what is digital identity? In a very, I would say, spontaneous, basic way, you could think of this as our ability to ping a central system like Aadhaar or PAN and get your details. I know that the route along which I'm going to ping is authentic, and I know the source is authentic, and you just pick up all the information from there. Back in 2010, the sector regulator SEBI came with the concept of a KRA, or a KYC registration agency. And what happens is that a new person who wants to come and join a mutual fund or open a broking or a demat account comes in. His KYC is done once, which means he does a proof of identity, proof of address, and an in-person verification. And then you're done for life. You're done completely for life, which means that record then becomes the authentic statement which can be visited again and again and again. You want to visit it every day, you can do that. Every hour, you can still do that. And the next time he wants to open a broking account, a demat account, a second demat account, go to another mutual fund, there are 46 of them, exactly the same record will be picked up. Over a period of time, telephone number, which is now becoming a part of digital identity, a lot of us don't think of it that way, but it is. Email ID, address, over a period of time, the bank accounts that you use to make payments, nominee information, just pinging UIDI to make sure that is the person alive or not, all of this is becoming central. And I think because it's become so central, so core, it is the underpinning of the entire infrastructure, the digital identity served through the KRA system has enabled the sector now to cross 10 crore unique subscribers this year across demat, broking, and mutual funds. In addition, if you look at how Aadhaar came in, and that advent started in about 7 or 8 years back, because then you could pull the Aadhaar information, you can do it in a completely touchless way, you can do it through biometrics, you can do it through OTP, and now DigiLocker. So you pull all of this in, and you realize that because it is reusable, a person can go and re-authenticate himself, update the information, make changes centrally. It creates a very productive, very reliable infrastructure, and that's gone up to a level. But there are always things that we can do better. So for example, there is no consent manager as a part of this architecture. And where does the consent manager come in? Account aggregator is the architecture which has brought in the consent of the person. For example, entity A or a registered intermediary A downloaded my data in 2014, I don't want them to hold it now. Can I get them to erase it? Today, no. Through the consent architecture, you can get them to erase. Somebody flagged me off as a default. In every banks and every database, I become a defaulter. Can I protest? In a consented architecture, yes. Otherwise, no. So when you see account aggregator, you see that that has brought this entire shift a level up. And I think the innovation will continue to be built on this. Today, we have journeys where we open accounts in 10 minutes. And it's completely AI-based, which means the consumer comes in, comes to the website, fills in all the information. And then we voluntarily, based on his consent, pull in the same information, let's say from Aadhaar. We can match the face, we can match the name, we can match the address, no human intervention. It's our proprietary algos. We do the string matching. I can set up your account in 10 minutes. You can actually buy a mutual fund. And this was unthinkable till about a few years back. We're ahead of many countries. And therefore, I think that entire superstructure that the industry has built has brought us to this stage. It's completely fraud-proof because every part of this is ironclad in terms of architecture. Nobody can impersonate. You can't go to a wrong website and start pulling information. All the KRAs are connected in real time. So a mutual fund can come to CAMS KRA and ask, is this PAN with you? And I will tell them, look, it is not with me, but it is somewhere in the system. Let me pull it for you. And I'll give you the information. So it's very strong. It's very robust. It's propelled the industry to where it is. It's a strong underpinning, which will continue contributing to our growth.
Thank you so much. I think that's an important point you made. Now we have the extension of the concept of consent management in financial markets being extended to digital markets ubiquitously with the enactment of the Digital Personal and Data Protection Act. And also, I think another good point you raised is that, the concept of consent management seems somewhat counterintuitive because it seems like you're inserting another intermediary between two parties. But I think it's important also to highlight the extent of disintermediation that facilitates, and rather than the retail consumer or any consumer having to deal with a host of intermediaries, they are just dealing with one now. So Subbalakshmi, on to you. Cooperative banks have been slightly late to the game in the context of digital identity. Why is this so? And in your opinion, what are some of the benefits that digital identity presents for cooperative banks?
Good afternoon to all of you. I do agree. Cooperatives, there are about 1,500 cooperative banks throughout the country. But in terms of percentage share of the business, we only have 5%. One of the reasons is probably the technology. Today, what happens for a cooperative bank is cooperative banks have always have a legacy of a set of customers who are very loyal to the bank over the years. But times have changed where the customers' requirements, at least the next gen who wants to come to cooperatives, is not very keen to continue with the legacy type of system, be it customer acquisition, or it be re-KYC, or with respects to any other additional opportunities can be explored with the customer. Without digital identification, it is not going to be easy for us to acquire customers and even retain the customers. What has been the challenge for cooperative banks, as you have mentioned, is adapting to technology. Most of the cooperative banks, except for a few top cooperative banks, have not had a robust core banking system also. API calling is one of the most important things when you want to have the data to be inserted into the database, the core banking database. And none of the legacy core banking systems even had the capability. So even if there is a bank who wishes to do a digital onboarding, the limitations of the legacy core banking system made it very, very difficult for the banks to adapt to this changing technology. Second is, there are a lot of new digital onboarding capabilities that are available in the market. Probably a few years before, there were hardly one or two top players in the market who were able to provide this facility. The type of infrastructure required for this, the data secrecy part of it. Today, there are opportunities of a SaaS model or storing the data on the cloud or taking services on a cloud. This has been a challenge. Number three is even cooperative banks in terms of the resources to manage this infrastructure has also been a very, very challenging thing. But yes, cooperative banks have to adapt to technology, new customer acquisition, customer retention, and because of these, there is a paradigm shift even in the recent cooperative banks. If you see, everybody is very, very, agile, and they have soon started actually accepting the change and adapting to the change. And things have changed substantially in the last 3 to 5 years. We've always seen that COVID has taught us a bitter lesson, okay? Before COVID times, probably you could not, you didn't have the challenge of acquiring customers or, even KYC. But COVID taught us a bitter lesson that it is time we all adapt to the technology, use technology-based digital identification and customer identification, which will help us to acquire customers as well as to ensure that the identified customers, all of us know, during COVID times, customers, cooperatives have a very less amount of internet banking registered customers. And when all of these customers were not able to move out of the office, how do I identify the customer that he's the one who has given us this particular request to do a digital transaction? So this was a bitter lesson which all cooperatives understood, and we've all adapted. And I'm sure in the recent times you must have seen, or in the coming times, we will be very sure that we'll be able to adapt to technology well.
Thank you very much, ma'am, for your candor. It's something that's typically uncommon in an industry conference. Debajyoti, on to you. NESL is a one-of-a-kind information utility. And you have the heavy responsibility of serving as an arbiter of truth. So in that context, how has digital identification enhanced your capability to do that?
Sure. Thanks, Meghna, and good afternoon, everyone. You spoke about information utility, so I thought I'll just make you and the panelists in the audience aware of what exactly is information utility. So information utility is, the creation was provided in the Insolvency and Bankruptcy Code. We are a regulated entity, we are regulated by IBBI. And if you see the regulator's webpage, it says that information utility as a concept has no parallel anywhere in the world. Now, I would have hesitated to use this word a couple of years back, but now that we have such unique Indian innovations like UPI, I can dare to say that information utility also is a unique Indian innovation. But what makes this institution so unique? So a couple of things. Firstly, any person can submit an information to the information utility. And just to clarify, information utility is a repository of information, credit-related information, similar to a credit bureau, but the differences is what I'm going to elucidate. One is, unlike the credit bureaus, any person can submit information. It is the banks, NBFCs, debenture trustees, but could even be a financial creditor or a private financial creditor. Now, if Meghna borrows some money from me, then I can also submit information to the IU. So what are the safeguards in place for this? The first safeguard is any person, whether it's an institution or individual who has to submit information, has to be identified. My panelists mentioned that we have various technologies now to ping a central database and verify the entity. The second very interesting aspect of what we do is any person who has to submit information, he has to submit with a digital signature. And third part is any information which is submitted to us, we present it to all the other parties to the debt. So what we submit is not just the submitter's version of the truth. We present it to other parties like debtors, guarantors, and they also can accept or dispute the whatever has been submitted by the creditor. So in that case, in that way, it is a very equitable repository. So all these aspects, which are very unique in nature, makes the information in the IU of evidentiary value. Now, who are the users of the IU and how it can be used? They are the banks, we give various kinds of alerts on occurrence of various events. It could help them in credit monitoring. In case they want to initiate insolvency proceedings, we also give a record of default. And then we also offer a fully digital document execution platform. And this goes in sync with our basic foundations of our creation, that it is a fully electronic repository, and all data which is with us is submitted through a digital signature and authenticated and verified. So coming back, Meghna, to your original question, how digital identification has helped? In fact, digital identification has only facilitated setting up this institution. It is, in fact, I would say, an institution. It is an institution which is there for service to the nation. And if this remote onboarding through digital signature was not there, we would just not have been able to reach out to so many of our users. In fact, this Aadhaar OTP, one of our panelists has mentioned, it not just identifies, it is also a valid way of authentication or affixing digital signature. And because of this Aadhaar OTP, we are able to authenticate information, authenticate documents, digital execution is possible. And all this sits in a central repository. And because of this digital identification, any person who's authorized to access this information. So in fact, it is something like a DigiLocker. I think one of our panelists mentioned about DigiLocker. It is like a DigiLocker of documents and information, and it is stored in a secure manner. And I would also say, since we are a regulated entity, our regulators also come out with guidelines as to what are the technical standards required to store such sensitive information. So various parameters are in place. We have a data center which is like a bank. We are subject to audit by our regulators. And we ourselves are an ISO 27000:2013 company. So all the safeguards in place to ensure that all the data and information which is us is safe and secure.
Great, thank you so much for that. There are opportunities, but then there are challenges as well. And I preface this, and Subbalakshmi ma'am prefaced this as well to some extent. Now the rose-tinted glasses have to come off. So with that in mind, Inderjit, the gauntlet falls to you first. What are some of the challenges associated with digital identification, particularly considering the cost of compliance that may fall on smaller institutions?
Thanks, Meghna. Now I think the rubber hits the street. Digital identification will reduce cost in the long run. It will lower the risk which the banking, lending, customer identification industry has got. But on that particular day, when a new guideline comes out from the regulator, and we have several regulators, that's the day we go scrambling on what is the cost of compliance. Like all good things, when digital identification came in, a whole layer of cybersecurity had to be created. Customer information confidentiality is of the highest order, and India doesn't compromise. We don't even let our data go offshore. It has to be in India. Many other countries let us do it for them, but we won't let it out of India. So the moment the compliance angle comes up, I've mentioned cybersecurity. In cybersecurity, we have things like IDAM, that's individual identity and access management. We have NAC, network access. We have NOC, your operating systems. We have MDM, mobility, hardening, device management. All those words, I can see many of you smiling because some of you are bankers. Each one is double-digit crores of compliance. What I submit is, it is not hard dollars going on brick and mortar or on servers and Cisco network. In this case, it's all software and firewalls. The risk is high. Just last year, a very big storehouse of data management in the US lost 25 million identities. and several were hacked. In India too, we have our own stories of different banks getting hacked and losing tons of money. Can't let that happen. So we have to be secure. But the good news is, like all infrastructure, and this my production colleagues will agree, we have to put it in one time, and it amortizes over the next 3 to 5 years. So you can write off the expenses, bite the bullet, and then let it die down in the next 3 to 5 years. But then again, there's bad news. The hackers are one step ahead of us. Just when we think we have the right firewalls, the right security tools, they've invented the next level. So then we have to go and reinvent again, and again spend capex to put all that in. Meghna, I think a minute more. We actually should do something like NPCI has done. Host of our conference is NPCI. All the banking and like-minded bigwigs came in, put in a ton of money, and created an infrastructure which will be the Payments Council of India. Similarly, a body needs to come out, backed by people on this panel and some more. And we should create a public-private infrastructure, which small, especially like my colleague, esteemed colleague here said, for smaller banks to tap into and do on a SaaS basis, software as a service, pay-per-use, so that everyone doesn't have to reinvent the wheel. It's an expensive wheel. So maybe if time permits, we'll talk about that later.
I remember we discussed this, and the first thought that came to my mind was Fort Knox or Mount Gox. A centralized security infrastructure makes it really easy for attackers to make a host of banks vulnerable. But at the same time, the cost considerations are prohibitive, and there are wider implications for access to finance. Small banks are integral, for the financial security, health, and financial inclusion in this country. So that is something that merits resolution. With that in mind, Anuj, over to you. I've already introduced the Digital Personal Data Protection Act, and it introduces this concept, like I said, of consent managers. How do you think, or how in your mind are the rules in the new act going to reconcile with the guidelines that the RBI has kind of already put out in this space? And more broadly, I think, given that you spoke about the centralized architecture for digital identity and some of the kind of security challenges that may raise, what are the challenges you see for building, engendering trust in the context of your industry?
No, sure. So I'll try to answer this in a broader way. But first, I can't resist the temptation to comment a little upon your earlier question. And theoretically, I would say that all of us are practitioners in advancing productivity, right? As a nation, as a community, whether you work in a factory or in an office, expansion of productivity and cutting of rework, I think, is just first principle. Doesn't need any automation, doesn't need any high IQ. Just take this whole concept of central repositories. You do your KYC once, and it's there for life, and you can just keep adding buttons of information to the same thing that you created 10 or 15 years back. It continues to get reused. How much does it cost to pull that information? 8 rupees, 10 rupees, 15 rupees. Now think of it in a very different environment where every customer does it again and again and again. It's a very unproductive environment because you're doing the same thing, the same document, the same in-person verification, 10 times over a journey of 15 years. And imagine all 100 crore, 150 crore of us doing it. And the costs are prohibitive because today the labor cost is probably 300 to 400 rupees an hour. And add to that the cost of printing and verification, all of that. We are probably creating a very unproductive society if we continue lingering to whatever remains of the past, because it certainly belongs to the past. The new stuff is extremely cheap, extremely efficient. Now the question is it secure or not? And I think that question did get answered, but I couldn't resist the temptation of just underscoring the point that productivity belongs to the nation and we will not be able to progress if any of our sectoral practices are regressive. That's point number one. Like I spoke, over a period of time, it is not just PAN and Aadhaar, which are part of digital identity. The phone number is, for example. The only fly in the ointment is how many of us realize that. And how many of us still go and buy a new SIM card because the plan sells cheap? And we're not realizing that take the account aggregator framework where you ping the system basis your PAN and phone number. Now, in a family, like in my family too, it's my phone number which is attached to many, many people's accounts. And all of that will get exposed and linked. But if you had an intermediary or a broker or a distributor or an accountant or an assistant, and if they did this, your information becomes visible to them. So I think societally across the system, just upping the awareness that a phone number on which you get OTP, similarly having the same phone number in your Aadhaar records is essential. A lot of people don't do that, and we talked about e-sign. All of those things will not work if you don't have that, and similar for email. So I think societally across communities, across the education system, just upping the ante on that understanding is very, very important. It is happening, and I would give the example of the capital markets where the sector regulator has come in with requirements where we will not take your email or your phone number. I verify it the moment you give it to me, and I will not set up your account if the mail bounces or if the SMS doesn't go through. But that's one part. Like we said in account aggregator, now there's a second level of consent manager embedded. And if you take the data protection law, it talks about consent managers. It talks about a basic architecture. And why is it needed? Like we said, intuitively, if you want your data to be retracted from someone who had taken it, you want it erased, you want to challenge something, you want to protest, you want to say, look, somebody has announced me as a defaulter, I'm not a defaulter, want to nominate someone else, all of this is possible inside a consent manager. That's just the architecture. And it's just a coincidence that these two things are coming almost at the same time. Account aggregator is, you can call it in full bloom now, but it's come into full bloom maybe in the last 12 to 18 months. The DPDP, of course, does talk of more explicit understanding on part of the consumer or the data owner in terms of how he's giving the consent. And I think 3 or 4 legs of that argument are, for what period am I giving it? Can I revoke or cancel it? Is there a frequency which means my data can be pulled every month or every 6 months versus it can be done only once? So those are the kind of things which, while they're already built in, may not be getting very explicitly announced. And I think the law expects this to get explicitly announced. So over a period of time, my own view is that given the fact that AA is a consent manager, is coming into full bloom, we should have the superstructure in a way so that it scales and grows to a certain size before we impose constraints. A lot of customer journeys are built around Aadhaar, a lot of customer journeys are built around account aggregator. A lot of that is going live. And because there's been a lot of thought behind that in the last 5 or 6 years, just makes sense for that to kind of continue than to impose a lot of, I would say, other constraints emanating from a new legislation, which will perhaps could potentially slow down the way things are getting adopted.
So if I can summarize, you need to build awareness of consumers in order to be able to enable them. And consent management frameworks, as well as account aggregator frameworks, work towards enabling them, but there has to be awareness built in order for consumers to be able to fully reap the benefits of such frameworks or some such regulatory interventions. And now over to you, Subbalakshmi. So my question to you is kind of the same as it was to Inderjit, but I'd like to push you a little bit to do a little bit of scenario building, you know, in the context of what it means when you have this burden of cost of compliance for cooperative banks and what it means for the future of financial inclusion in this country.
The challenges that we are speaking about. Today, most of us share Aadhaar sometimes. You know, there are many places where we go and we easily share our Aadhaar details. Identity theft has become the buzzword. Okay. Second is, the most important is, how is the customer information stored in the database? Database encryption, especially, and data leakage prevention. This has become again the buzzword. Number 3, most of the organizations do a lot of outsourcing. Okay? Outsourcing for some of the activities, where later what happens is some of the information either by the outsourced agency or by an outgoing employee is misused. Number 4 is background verification checks. Most of the times, there are a lot of people who come into the organization, they are there for a very temporary period because of limitations in terms of bandwidth, in terms of manpower. And then there's a compromise which happens. We don't know what has originated this. Regulation of late, there are 2 to 3 important circulars which has come to all of us in terms of banks. One is the Master Circular on Outsourcing and the Master Circular on Digital Payment Controls. This, while we say there is a cost of compliance to these 2 circulars, there has been the recent past, because of lack of cyber awareness amongst the customers and consumers, there is some compromise which has happened about the identity. And then how it gets misused and what would be the implications is not understood to the end customers. So while we do say that regulators has increased the cost of compliance, it is also imperative for the banks to safeguard the consumer interest, because at the end of the day, the customer is putting his hard-earned money into the banks, okay? And any compromise on the data side, on the PII side, would lead to a big outflow of funds. Today, hackers are very, very intelligent. How they get into the database, one, he mentioned MDM, one loophole into the system, and it's very easy for them to get into the database, change the customer identification details, and siphon out funds. So while the cost of compliance is imperative, that yes, we get into a common entity sort of a framework where, we can protect all the banks through one common framework. There are certain things which awareness, cyber awareness amongst the customers, education amongst the customers, little controls incorporated within the organizations, especially with respect to outsourcing as well as in digital controls, are going to be the important things which each bank would have to adopt as we go forward.
Thank you so much. Debajyoti, on to you. Where do you see the shortfalls in the digitalization of identification? And what are some areas that remain untapped? And why do you think that is?
Sure, I'll deal with that. And after that, if time permits, I'll just respond to some of the comments of my fellow panelists.
Sure.
So, what I say is a challenge is also of huge benefit to banks. We talked of verification of digital identity. Now we have a beautiful system of Aadhaar, where when you're verifying the digital identity, Aadhaar actually verifies 4 parameters. And one of them is the name. Now, if you do 100% matching, so it'll almost invariably the transaction will fail. So we have to take the decision as to how much matching we need to do. Now, typically, for example, I'll tell you why it could fail. One is there could be differences in the name. 2 is, for example, if you are, say, Colonel, so you'll have Colonel in your name. But if you have 100% matching, it'll invariably fail. So you have to take that call as to how much level of matching you need to take. But although this is a challenge, but it's also a huge benefit in the sense that it also verifies your data from the Aadhaar database. So that is one part. Then the other usual challenges we have is, my fellow panelists talked about mobile OTP, biometric. So mobile OTP, one of the challenges is that connectivity is an issue. Sometimes the mobile is not linked to Aadhaar. Biometric is a beautiful facility. It can be there for anyone. Small value loans, biometric is very good. But the banks, one of the challenges is that how do you have the biometric reader? You need some mobile connection. So if mobile connection is not stable, so biometric reader will not help. And normally bank branches do not have a broadband connection on which the biometric reader can be run. Otherwise, biometric on a tablet-based facility through a business correspondent can work very well. The second set of challenges is related to legal entities. Individuals for Aadhaar entity works beautifully. Individuals for legal entities challenges, One is if it's a company, we have some data from the MCA database, but we need access through an API to do a real-time verification. But then what about other corporate entities? What about partnership firms? Majority of MSMEs are partnership firms. Partnership firms, proprietorships. So there are two challenges. One is, how do you verify the identity of the legal entity itself? And then even if you verify it, how do you identify who are the authorized persons who are signing on that? Now, this is the challenge, and I have one suggestion also how we can go about it. There's a concept of legal LEI, legal entity identifier. It has been introduced in a small way, but gradually we need to get this across so that every individual, every firm can have a unique identifier. I think RBI has issued some guidelines on LEI, but it's still not widely prevalent. But if you need to have digital onboarding, this LEI needs to be introduced at some point of time. Even now it is voluntary, but I think some regulatory push is required from that side. Now, if you give me a minute, I'll respond to the comments. Otherwise, if time is up, it's
Yeah, we're out of time, but I'd like everyone to just, for 30 seconds each, just quick recommendations. Agreed, if we've had Aadhaar for cows, I think we should have Aadhaar for companies. But Anuj, you first, and then Subbalakshmi, and then Inderjit. Any recommendations based on the challenges that you highlighted?
No, I think overall the acceptance of digital identity in various uses has grown significantly. Depends upon the sector acceptance. I can talk about capital markets where it is upwards of 70–80%. And in many situations even better than that. I think from a legislation regulation perspective, we appear to be in good shape in terms of how the guardrails have been built. And therefore, it is for the sector to continue to invest their energies in these exercises. I think education and awareness and lifting the bar on that continues to be a common agenda. But apart from that, I think we're in good shape.
Cyber awareness is something very, very important today for everybody to accept and adapt.
They say in Rome, go vadis. I think digital identity is here to stay. Let's get used to it. It's a huge positive for India with the kind of diverse demographics we have got. The next step we should do is international digital identity. And I think India will lead that path too.
Thank you so much to our panelists for having this very honest and frank conversation. I think that candor is really the order of the day and moves us towards progressive and regulation that benefits all stakeholders in the ecosystem. Thank you so much.
Thank you.